Welcome to the Compounding Interest Podcast. My name is Jesse Rogers, and I'm here with Cheyne. And you guys may know him as Swaywithskill as well. I know him as friend. He's been a gamer and a poker player, and as well as a teacher. You know, he doesn't just take your money; he also teaches you and your kids how to succeed. So,
I teach you how to take other people's money.
Right, there you go. So welcome to the podcast, Cheyne. And we go back many years. I guess we could maybe start there. We've been helping people learn about math and about finance and those kind of things in a very small scale, one-on-one. And now we get to do like reach a wider audience. That's a pretty cool thing. So how many years have we known each other at this point? I don't even remember.
I forget. I mean, it's it was like mid 2000s, maybe 2007, something like that.
Warcraft was still really big.
Warcraft was?
I remember
Warcraft
that, yeah.
or Warcraft 3?
Which one were you like a top player in? I think it was Warcraft 3, wasn't it?
Warcraft 3. Yeah. I mean, World of Warcraft, I was pretty good when we were talking about we were like, I think it was Burning Crusade, the first like arena tournament. My team was right in the mix. We came up just short though. It was like, I think it was top 8 that made it to BlizzCon, and I think my team finished 11th. So, but there was like, like thousands of teams playing. So it was, yeah. So, but yeah, most like in the gaming world, I'm most commonly known for for Warcraft 3.
And I did beat you once at StarCraft 2, I recall.
Yeah, you did. Yeah.
One time.
I still remember that. Yeah. You can take that with you all the way to the grave. I'll never be able to take that from you.
I will always have that. Absolutely. I still remember it was cloaked raids, just killing those Zerg. It was so wonderful.
Yeah, and I was just like, oh my gosh, I can't believe this is happening.
I've beaten you at poker before too, like
yes,
once or twice, but that's only because we played so much poker.
Right. Yeah, we played a lot. I mean, the sample size is very large, so you've beaten me plenty of times. You've beaten me in poker way more than you have at StarCraft.
But I've also donked away a lot of money at the tables too, so that happens a lot. But no, I've learned so much from Cheyne, and so it's been a real privilege to know him, and I'm glad to be able to introduce him to you guys here. And some of you may know him more than you know me, so it's great that we all get to be introduced and get to know each other. So yeah, with that, Cheyne, you've kind of, to sort of transition into where your mind has been lately and where your attention has been since the pandemic. You've actually been someone who, in addition to being intimate with the gaming world and the poker world, you've gotten into higher stakes bets, and one of those has been on Reddit. So go ahead and tell us a little bit about the communities that you're involved in and the kind of things that are on your mind now.
Sure. So getting into investing is a somewhat recent thing. Like when I mean recent, is like in terms of my entire life. Investing has only been maybe like the past 2 years or so. Starting with I was really excited about the Model 3. I ended up buying one. And I was like, when I was driving this car around, I was like, wow, this is going to change driving. EVs, the fact that it doesn't have to be a boring car. It can be really cool. It can go fast. It can be, financially make sense, especially if you have to drive a lot. I was like, I need to get my skin in the game here. I need to like invest. And so I did. I did some research. The first place that I started was because my wife Sarah was more into Reddit than I was. So Sarah came across Tesla Investors Club, and she's like, Cheyne, you should really look at this. It seems like people are doing some really good work here, and analyzing what's coming forward with Tesla. Because at the time, it was a battleground stock. There was people that were really in favor of it, and then you had a lot of people that were pessimists saying like, no, they're going to go bankrupt. And so there was quite a battle going on. And so like, before we bought stocks and stuff, I was reading about this. I was like, some people are thinking that it's going to zero out and go broke. And some people are thinking it's going to be the #1 company in the world at some point. And so like I spent like a decent amount of time reading these things, and I was like, you know what? I was like, Sarah, we just got to buy some stock. We're not going to like mortgage our future or anything, but whatever cash we have that we can afford to lose, we're just going to put it in Tesla. And so at first we bought 10 shares at like $200 a piece. And that's before the stock split. So really it was $40 a share in today's, if you want to look at today's stocks prices. And so yeah, we bought some at that time, you know, more good things coming around. You know, they're doing better at ramping the Model 3. It seems like they're making it through the production hell as the people thought they were going to go broke. You know, they made profits in Q3 and Q4, which they had made profits before in previous years in Q4. But so then the test was, can they make profits year round? Can they finish a whole year being profitable? And so then that moment came, and it seemed like based on what I was reading, that was going to be a thing. So it was like, you know what, we got to buy as much as we can again. Then the pandemic happened. Everything tanked, right? Tesla went all the way down to, I think, like 350 a share. That was pre-split. So that would be like $70 a share. And I was like, you know what? We should buy some more. And so I just bought as much as I can. But anyways, after all of that said and done, I now have 79 shares of Tesla.
Nice.
So, you know, having the success of that, and I know that that's not normal, like to make that kind of a win on a bet on an investment though. But it did kind of open my eyes to something that I wish I could have been a part of for a while now. So since then, you know, I've been reading a lot more about investing, and you know, I've been wanting to invest in other things, but all my capital is in Tesla right now.
Right.
So, but eventually the plan is to invest in other things too. But then this thing came along.
GameStop.
GameStop, yes.
Yeah.
And you know, like during this time, like, you know, I connected with some of my other friends that are into investing and stuff. He's like, dude, you should check out wallstreetbets. These guys like make these like ridiculous, they go YOLO on all of their money, and they either like hit it big or they just lose it all. And so I went on there, and I was just like, wow, people are losing like their life savings of $200,000 and they don't care. Or at least, I mean, I don't know how it's possible that you don't care, but it's just like, I don't know how somebody could put a single bet on their life savings on a derivative above anything. We're not talking about stocks here, like derivatives, and then just lose it all. So, but the memes were pretty good too. So, you know, I go there for the memes. I would see like these people that have, way more, I don't know if I want to call it confidence, or people that just have no fear, willing to bet everything that they have just to try to make a bunch of money. So, but then I started noticing like these people talking about GameStop. I was like, what's going on here? So I read into it a little bit, and you know, I find out the story that, you know, the company's not as bad as people are making it out to be. You know, the guy from Chewy is now on the board, and he brought some people on as well. They're going to try to pivot online, and you know, people are thinking that this company could actually be sustainable. And then on top of that, 140% of the stock float is being shorted. And then they're like, we need to buy and create the squeeze, and yeah, we can make a lot of money.
So what happens if the squeeze gets painful enough for the shorts? How does that work?
Okay, so, you know, with the short squeeze, you know, they shorted because they thought the company was going to go bankrupt, and you know, they also can do other things too to try to manipulate that downward action. Right? They can come out and set hit pieces saying this company is going to be bankrupt in 6 months. You know, they could even use their money to like make the shares move around, the price move around, to make other people panic sell and stuff like that, right? To try to make sure that they win. So where was I going with this?
Well, what would happen? What would happen if they lost? I guess that's because if you're 140%, what does it mean to be shorted that high of a margin?
Okay, so I mean, the issue is that you know, if the price were to rise, if they start losing, you know, at some point they have to cover their position. You know, they're paying interest for every day that they're short this stock, right? And that price that they're paying goes up as the price goes up. Okay, that premium that they're paying goes up. And so if they're shorting the stock at like $10 or whatever, and now it's like $325, you're starting to pay a lot of money every day to not cover your position. And so at some point, if you don't have enough collateral, the bank or whoever you're shorting with is going to be like, okay, like you need to put up more collateral or otherwise I'm going to make you buy the stock. And so that's the kind of tipping point that Wall Street Bets is hoping for, is that moment to come where they have no choice but to buy the stock.
Right.
And so when they do that, that's going to create an upward price.
Right.
Other people are going to get margin called as well and have to buy the stock. And then the problem is that there's not enough shares.
Right.
It's shorted 140% of the float.
Right.
So I mean, I don't even know how that's going to happen. I don't know.
GameStop would have to release new shares or something, right? I mean,
yeah. And I think it's, other people have brought that up. Like, why doesn't GameStop just, because the price is so high, they could raise a lot of money right now. They could help them pivot, kind of move to online. And I think the reason why I think they're trying to stay out of this is they don't want negative publicity. I actually think they're winning right now.
Yeah.
Just because of their name. I mean, it's getting put on billboards. I don't know if you saw this, but like on Times Square, someone paid $50,000 today to just show GME go burr on one of those huge screens on the side of the building. It's there's a billboard in Austin, Texas, in Utah. Someone flew a plane over Robinhood's headquarters, telling them to go F themselves. So
it's hard to lose. It's hard to lose in America when everyone knows your name, right?
Yeah.
It's hard to lose.
They're getting free advertising right now. And I'll be honest, like I'm excited. Like as a kid, like went to GameStop all the time. I bought plenty of games from there.
Yeah.
I went in there yesterday, actually. I was curious. I haven't set foot in a GameStop in a long time, but I felt like I deserved to, they deserved me to buy some of their stuff. So I went in and bought a Bulbasaur and a Pikachu for my son, Austin. They didn't seem, I told them to hold the line, and they didn't seem very happy about that.
Okay.
I think they're kind of annoyed with the whole thing. Apparently, like, people are calling in to GameStops asking them for investment advice and stuff. And the guys are like, I don't know. Like,
they're cashiers.
So,
right? So
yeah, they're just kind of over it.
Right.
But I think that the reason why they're not issuing more shares right now is I think that would be very negative, like public.
It would look
opinion.
greedy.
Yes.
Yeah.
I think they will eventually, and I think when this is all said and done, if it ends okay, unless this, like, we just set the world on fire, then they probably won't be able to raise capital. But I do think that they'll end up with a stock value that's higher than what it originally was, and so maybe they'll use that opportunity to raise some capital.
So your experience with the shorts and with the big guys trying to manipulate the markets to try to put downward pressure on a price and make their bet come true, that you experienced that going all the way back to Tesla, because they've been trying to do that to Elon Musk for a long time. Is that right?
Yes. And and so that creates an extra incentive for me. Like, I want Wall Street Bet to win, because that was another tailwind that Elon had to face. A guy that's trying to make a difference in the world, try to allow us to have renewable energy, to allow us to overcome the problem of climate change and stuff like that. And you have these companies trying to make a bet against a company that is doing just fine, just because they see an opportunity that they think that they can capitalize on. So they put out all these like fake news stuff, like stuff that, just try to send the stock price down. And like people trying to intentionally wreck Teslas on the road, like running into them. And
wow, that's extreme.
Yeah. There was some crazy stuff going on. And so like Elon was really pissed off about it too. And, I don't know if you saw, but he tweeted GameStonk like last week or whatever. And that sent the price higher too. So There's definitely, I think, a lot of people, a lot of even like billionaires or company owners that can sympathize with like the Wall Street bet position and are kind of anti-shorters. I mean, I do think that shorting does have value because it's like a way of sniffing out bad companies. But the problem is that they're trying to do it to companies that aren't dead yet, or maybe shouldn't be shorted, or at this point, like you're shorting more than the amount of float that even exists. So,
Right. So it's lost. Reality has left the station at that point, and it's purely speculative. It's not even so. It's not that this is a struggling company and they are, making a responsible decision. It's more of like they're just a predator trying to gobble up smaller businesses, and not really do anything productive in the economy, because it seems like the volumes of money that are being exchanged. And I was listening to that podcast that you shared with me, the All In podcast. Fantastic
yeah, big fan of
show.
Chamath.
Oh
Love
my
him.
goodness.
I love all those guys. I didn't know those
Yeah.
other guys, but like after listening to that,
Yeah.
They're great. Like
Yeah.
It's really good.
And I believe there's a campaign for governor starting to brew there too, for governor of California. Maybe we'll talk about that.
Well, I saw on Bovada, like you can actually bet on who the next governor will be, and he has the highest odds. You actually get even money on him right now.
Well, I love what he was saying. Basically it was that none of us really knows what's going to happen. Just to kind of summarize for everybody that's listening here, even it doesn't matter how smart you are or how knowledgeable you are, no one knows what's going to happen now at this point, because it's basically like 3 million hands on a Ouija board. That was pretty much the illustration that they were talking about, is that this could really go any direction. No one's in control, and that's scary on the one hand, but it's sort of like this is the most democratizing thing that's happened in finance for a while, and happened in the stock market for a while, because these companies, these huge predators, are just out there gobbling up the weak, or the isolating these companies that they think they can take down, like Tesla. And some of them are famous enough or have enough support that they can withstand it, but a lot of these companies are just going under and taking lots of jobs, and lives being ruined, and all that kind of stuff, really for just greed is what it comes down to. And so it's understandable that people are really getting upset about that. And I think that's where a lot of this is coming from with GameStop, is that I know of people online that are investing in GameStop and basically saying, I do not care whether I lose my investment or not. I want these people to pay for what they're doing, because it's wrong. And I think that's where you're at. Yeah.
Yes.
So you've got some skin in this game. You own some GameStop.
Yeah, I have. I bought one share at first because I was like, yeah, I'm in the movement, right? Stick it to them. Like what they're doing is greedy, not fair. They're trying way too hard to try to, try to kill this company, which I can understand the argument to short GameStop, especially, when the bet was made, in 2020. Pandemic, is going to go the way of Blockbuster. I totally get that. But to short more shares that actually exist,
right?
At that point, that's greed.
Yeah.
Like that's ridiculous. And so and so it's pretty neat to have like the little guy, like the guys on Wall Street Bets that dump their paychecks on making I don't know, buying puts and calls and either triple or 100xing their money or losing everything. Like they found this opportunity and they're taking them down.
Yeah.
Making it pay. Right. They're the ones, the hedge funds are the ones that are usually taking advantage of situations. Well, now the tables have been turned and they're taking advantage of them. The Wall Street bettors are taking advantage of hedge funds.
This is an army ants just gobbling up a giant bear, right? Like, that's almost what this looks like.
Yeah. So that's pretty exciting. I wanted a piece of it. It's like, whatever. I bought in high. I bought it, my first share at, when I first bought it, I had no idea because I set the market price, which maybe was dangerous because it was, so volatile. Mm-hmm. But it turned out I checked the next day and it looks like it locked in at 292. So I got one share at 292, And then after the Robinhood thing, I was like, no way.
Right.
Like I gotta put more fuel into this. Like I gotta, stick up for what's right. And I bought 2 more. Just because I don't have like I have like 79 shares of Tesla. I have a lot of money in that one company, but I was like, you know what? I got to do what I can. So I bought 2 more. Again, if I lost the money, whatever. It's not like I'm not gonna be able to make my house payment or whatever bills I have. I'm fine, right? But yeah, I wanted to throw whatever I could at it.
Yeah.
And so now I have 3 shares.
And let's be real clear. You are a very experienced gambler. Like you've been a professional gambler before, right? At the poker tables, you have put down thousands of dollars.
Yes.
And I think it's really important for people to understand this, that this is not your first rodeo. You have the psychological and the experiential wherewithal to do things that very few people would be recommended to do, right? Because if you're taking your life savings and you're putting it into something as speculative as GameStop, one of 2 things has to be true, right? And like either you really have a good thesis and you are taking a serious risk, but doing so with a firm understanding of the mechanics, and you have a positive expected value, even if you could lose everything.
Right. It'd be like getting it in with pocket aces. Like
right. That's like getting it in with pocket aces. That's basically the analogy. Yeah.
But you could lose.
Yeah.
Right. You could lose. You could be at worst a 75% favorite. Well, you're going to lose 25% of the time.
Yeah. And you can do that at this stage in your life. And with the kind of fortitude that you have, you can do that. Most people probably shouldn't is my guess. So if you're watching this and this is your first time trading, I would be really reluctant to say that it's a good idea to get Robinhood and go all in on GameStop. That's probably not your opening move to this game. It is kind of where my mind's at. What are your thoughts on that, Cheyne?
Yeah, I mean, I agree in general. I mean, you could buy 1 share just to say, hey,
I was part of this thing.
I'm part of it.
Yeah.
But you know what? Like if you buy that money, if you buy that stock with money, you should assume that it's gone.
Yeah.
Like you cannot expect to speculate. Like, there's some talk on wallstreetbets that, that when it's all said and done, you're going to be able to walk away with $32,000 a share. That you should not be expecting that.
Right.
You should expect the worst, that it's going to be worth either something like 0 or close to 0.
Mm-hmm.
So, yeah, if you're getting into this, like you should not, especially if it's your first time investing, this is not where you want to be.
Right. And that's pretty much where my audience is going to be, because I'm trying to talk to students who don't really know a lot about money, haven't really gotten into this investing world. And, because that's who I work with on a day-to-day basis. I tutor algebra and calculus and all these things. And I want to make sure that at the college, sorry, there's a phone going off in the background. It's messing with my, my concentration here. But what I want to do is make sure that the people who are coming to the colleges are coming away with the sort of skills to set themselves up for the kind of life that they want to have 5 years from now, 10 years from now. I would love for you to just have work and the skills that we're training you for be only one phase of your life, your financial development life cycle. I want you to be in a position where you're financially set to the point where you can choose whether or not you work in the years to come, right? Where your investments and your financial position is secure enough that you're not forced to go to work if there's a pandemic and you're afraid of your health, or you're not forced to go to work if you would rather stay home with your kids and do parenting as your priority at the moment. I want to see people have that kind of freedom. And so that's what the Compounding Interest podcast, that's what my mindset is with that, and where I'm trying to get people to. And I think there's just so much opportunity to do that for the people who are young, because over time, whatever you do, it just compounds in a really significant way. And the best time, you mentioned that you only got started about 2 years ago in this. and you now own 79 shares of Tesla, which is just fantastic. Because for a teacher, as a starting point, you know, everyone knows we're not paid enormous amounts of money, right? And so to be able to take what you do, the resources that you do have, and translate that into that kind of success, congratulations, man. That is like the dream. And
Thank you.
yeah,
Yeah, it's a good start. You know, I don't want it to end there, but it's definitely a good start where eventually we want to use that to grow even more. And then, you know, I think the objective is to maybe even invest in at some point invest in new companies that need capital,
yeah.
right? Ones that have a good vision, that are going to make the world a better place and stuff like that. And you can help improve the world that way.
And that's exactly what I want to do with this podcast too, is give entrepreneurs that are interested in doing that a chance to have their ideas come into the into the public space in a way that would be difficult otherwise. So that's another segment of the audience that or the conversation that I want to bring in is in addition to the learning part, I want it to be where investors like yourself would be able to see those entrepreneurs and get behind those ideas and interact with the people that have those ideas and say, yeah, I like that. I want to be part of that. So, that's in the years to come. That's where I want to take this.
Yep.
And so, man, so where do we go from here? Like the 140%, that's actually kind of dangerous. It sounds like, because what would happen if these huge hedge funds could not cover, and what happens as the price goes up? Like, what's going to happen to those hedge funds, and what kind of money is backing them, and what would be the effects here?
Okay, so with 140% of float, it's going to be hard to find enough sellers, to cover. Well, I mean, I don't even know how that would work. I guess someone would have to sell. I don't know. There's not enough stock.
Yeah.
So if they do end up having to if they all get margin called and have to buy, then effectively the sellers can sell at whatever price they want.
Infinite.
Yeah. It's
money just doesn't even. Yeah. so basically, they would have no choice but to just declare bankruptcy to get away from their.
Right. But someone has to pay. Like
okay.
Someone the people are going to get paid.
Someone's on the hook for it. Right.
Right.
Someone's on the
hook.
hook.
If they go broke, then their backers are going to pay for it. Right. Or the insurance company or banks have to pay for it.
Right.
At some point, someone's going to pay.
Right.
And so we're talking about a domino effect here where it's not just the hedge funds getting wiped out, but you're looking at like the entire financial market going under.
Mm-hmm.
We could be talking about banks failing or insurance companies failing, and that's like a domino effect, and it's going to affect a bunch of other things.
Yeah. So how far could the consequences of this thing spread?
I mean, countrywide. I mean,
internationally,
because yeah, absolutely. Because other countries are relying on the United States. If we go under or are in serious financial trouble, there'll have to be bailouts and stuff. But it's 2008 all over again, or maybe even worse.
Yeah.
So that's we're talking a worst case scenario here, right? That's what could happen,
right?
Theoretically, right?
And so this is like up there. The mathematical illustration that maybe we could use is like, this is division by zero, basically.
Yeah. I mean, I was reading a post on Wall Street Bets, a guy that was being very serious, like doing some math here, saying that he thinks that the average cost per share on this squeeze could be $32,000 a share. Now, if you do the math, there's about 50 million shares short. That's $1.7 trillion.
Okay.
That's $1.7 trillion.
That's a lot of money.
Yeah. That will bankrupt a lot of people. And the average person's gonna feel that too. So it's not just like when you're at that point, you're not just talking about hedge funds anymore. You're talking about everybody. And I think that's something that we want to avoid. I mean, I support the movement, but I don't support tearing everything down.
Yeah.
So go ahead.
Well, I was going to say we're not just talking about hedge funds at that point. We're talking about people's retirements, their entire portfolios that they've been working their entire lives to try to build, 401k plans, all that kind of stuff. It could vaporize, right?
Yeah, you're already starting to see that now. Like if you notice, like the past couple of days, like the market's been down. Well, there's a couple things that explain that. One is that these companies that are short are having to sell their long positions to come up with capital so they don't get margin called.
Right.
So they're having to sell their Tesla, their Amazon, their Apple. They're having to sell all of those to put up enough money so they don't have to exit their position yet. Then you also have some people that I know have messaged me. They're like, oh my God, it's all going to come crumbling down. They're taking their money and they're getting out. So between both of those, that's why I think you've seen the stock market go down the past couple of days.
So they really got caught with their pants down on this one.
They're in big trouble. Yeah, for sure.
What's the solution, Cheyne? What can we do about this thing? All
right. So I have an idea, and I'm actually going to introduce this into Wall Street Bets. Not that I have any significant sway or anything in there, but
your name is Sway. What are you talking about?
I know. But I'm just a little guy. You know, I own 3 shares of GameStop.
All right.
I'm not DFV. I'm not like I'm not a millionaire here. Like, so, you know, I'm gonna make a post about a solution, and you know, it's a work in progress, but it does have 2 main points. One, I think that we have to come up with a price point which both parties can live with, and how, because I think what's going to have to happen is we may have to arrange a way for the hedge funds to exit their position, but they're going to have to feel some pain. There's no way around it. There's no way that people would accept this. They're going to have to bite the bullet. And so I was thinking about this, and you need to come up with a number where, you know, everybody's going to be happy, at least on who's holding shares right now, right? So it has to be higher than the all-time high, because there's somebody that came in at like 480 or something. That was the all-time high for GameStop. So, but I was thinking that you would want them to at least get a decent return, what would be considered a really good return on their investment. So maybe I was thinking the all-time high was about 480, I believe. So if you came up with like a price point of $650, right? You make the hedge fund buy every share of float for $650, right? That would cost them, I believe it was about 36 billion.
Okay.
Billion with a B. That's going to bankrupt them. Like that, I think. I mean, I guess I don't know exactly how many assets they have. That's going to put them in a really bad situation. But it is something that is achievable, though. And I don't think that's going to, you know, have this domino effect where everything just explodes. You know, that's still like an incredible amount, way more money than what GameStop is actually worth.
Yeah.
Right. So I feel like I would think, we'll find out when I suggest this in Wall Street Bets, but, you know, that would allow people to be rewarded as they should be for taking advantage of a situation that was the hedge fund's fault, but also at the same time not bringing everything down. So that's the first thing, is that the hedge funds need to buy the shares at 650, which they don't even get to keep because it's short. Remember,
right?
It's not even theirs in the first place. And then after that, we need to come to an agreement that you cannot short a stock more than 100% of its float. And you can even go below that. I don't know the number. Like, we could have some expert figure out what that percentage should be. Because really, like 80% or 60%, that's still pretty high.
Yeah.
But I'm not an expert in that area to know exactly what percentage it should be. But what I do know is that it should never be over 100%. So I think if you come to those 2 agreements, and maybe there could be more things to add, but I feel like that's a place to start. And, you know, as Chamath was mentioning in this podcast, I think he had a few things. You know, those things could be legislated in, I think. What were we going to say?
Well, I was going to say, even without legislation, I think you'd be very hard pressed to find any hedge fund manager anywhere who still thinks it's a good idea to go over 100%. And so that will probably, like, the pain of this and the punishment that these shorts are taking is probably going to have a influence that goes beyond what regulators could ever achieve. And so that could be a real achievement of the movement. And, that would be certainly a groundbreaking check against a system that's out of balance.
Absolutely. And I think that's why I kind of like what Wall Street Bets did is it was a natural approach to correcting something that hedge funds shouldn't have been doing in the first place. So yeah, like after all this, I don't think that a stock will be shorted over 100% anymore, because in today's world with technology and stuff, and people can organize in a place like Wall Street Bets, like that's just not going to fly anymore.
Right. Yeah. The proof is already there. So no doubt. I think that second condition probably is not going to be the sticking point. I think it's going to be the first one, the price.
Yeah. And I don't I don't know if Wall Street Bets is going to be okay with that price. I don't know because all these people are throwing around money like $5,000 a share, $32,000 a share, $1 million a share.
Right.
Like if you have something that high, like that's, I feel bad. Like they're going to make some money, but you're wrecking everything else around you. What's the point of that?
Yeah.
You'd be the last man standing in you succeeding. You got to have everybody else succeed too.
Otherwise it's going to be like basically the Joker standing over a burned pile of cash. Right. I mean, it's like the Dark Knight, like the most catastrophic scene, that you can imagine is what we're headed for. If there's no reconciliation to this, if there's no resolution that the parties can agree to.
I'm back.
Okay. All right. We lost you there for a second, but so what I think needs to happen, I agree. There's got to be some kind of a negotiation. I don't think the hedge funds will ever be willing at any price, because I think they still think they can probably win. I think they're too optimistic and too stubborn on that. But that's like the All In podcast that you shared. They had a great line in there where it was something like, we can be stupid longer than you can be solvent. It's like that's basically where Wall Street Bets is at. Like they can win.
They like to use the word retarded, but it's not a politically correct thing to say. I don't know.
Right. Yeah. No, you're right.
Totally different.
That
right. But that's like the Wall Street lingo, is that we can be retarded longer than you can stay solvent, for sure. But the problem is the longer that we wait, the bigger this price tag is going to go up.
Yeah.
So yeah, I think there's it's important to try and solve this now. I mean, it's definitely a waiting game. It's a war.
Yeah.
Both sides are trying to win. And, to be honest, even though like the hedge funds have more money, they're the ones that are burning money here.
Yes. Time is on the side of the GameStop investors, the retail market.
All we have to do is hold. I mean, the only thing is that, all they can do is maybe like if they were able to manipulate the price a little bit, set out some news that makes people sell, right? And then there's like a panic sell and everything is over, right? That's the only thing that can happen. And maybe, I don't know. How do you coordinate millions of people to hold?
Right.
That's a challenge, right? So it's not, set in stone that the Wall Street bettors are going to win, right? Because it's hard to hold at a price that we know is not like the value of GameStop.
Right. Well, you've kind of convinced me through the course of the conversation to buy one share. I think I want one share of GameStop.
I think you should. Yeah. As long as, I don't know, like you need to get in, or the way that it's been trading recently is that it gets super pumped at the very beginning.
Yeah.
Like if you look at pre-market, it gets jacked up big time.
Yeah.
And then right at open, there's a dip.
Yeah.
So you can wait there if you want to save yourself a little bit of money. And then after that, who knows?
The amounts we're talking about are not even going to, like, whether I save $20 or $30 or whatever, it doesn't even matter. It's like just being in it is the whole thing. So all that money's gone, as soon as I buy the share. But yeah. So I don't know but this is getting more fun as I think about it, and as we talk about it.
It's pretty exciting to hold the share. You feel like you're part of it, even though, it is just one share. But suppose there's 1 million of you that buy one share.
Right.
That's 1 million shares.
Yeah.
That's 1/30 of the float.
Well, and I also, I do want to see it at the table. I do want to see it at the table too, and I want to be part of this conversation, which is part of why we're doing this in this forum. And one of the things that I want to say is that if we need to have a negotiation, I am going to summon the best negotiator here by speaking his name, and that is Chris Voss. I don't know if you've seen my posts about Chris.
No.
He's a former FBI negotiator, lead negotiator, and his outfit is called the Black Swan Group. And this is a Black Swan event. That's exactly what this is, where no one could have foreseen how this would play out, and that this would be such a historic event, and no one knows the way out of this thing. And so we're going to have to get there together. We're going to need an expert negotiator. And so if he could be part of mediating this thing, I think the chances of civilization surviving would be considerably higher.
Okay.
So
Yeah, that sounds good. I mean,
yeah, just by speaking his name into existence, and as you know, in this context, hopefully the algorithms find it, and it becomes a thing, because Chris Voss would be a help here.
Yeah. Then when I talk about reaching an agreement for like $650 a share, how do you negotiate for 3-point-some odd million people?
Right.
Like, it's easier to negotiate from the hedge fund side, right?
Yeah.
But how are you going to negotiate for everybody? And it's not just people on Wall Street Bets. Like, it's people that don't even visit there,
right,
that are on GameStop, right? So, you would have to have some people represent, all of us, right?
And I want you guys that are part of this GameStop movement to know that Chris Voss is. I've been listening to a lot of people on YouTube for a long time. Chris Voss is the one that impresses me the most on the issue of negotiation.
Okay.
He is the guy. That's who you want in your corner. Get him before
I would
get
trust.
him before the
I
shorts
trust your
do.
recommendation. I don't know him, but if you say that, I believe that.
Yeah, he's got a book called Never Split the Difference, and basically it's like you can't just compromise somewhere in the middle and expect, because he's a hostage negotiator, right? So it's like you can't say, okay, well, give me one of the hostages, you get to kill the other one, and we'll call it a day. It doesn't work like that. You've got to get to a resolution that gets those people out safely, and you've got to talk down somebody who's in a really emotional state, right? They're in a panic, and that's where the shorts are right now. They're panicking because they know the jig is up. Like, they are in deep trouble. And so he's got to talk to them in a way, and that he's just got such a talent for, that's gonna get them to understand what they need to do, and have the emotional grounding to be able to act on the right thing.
Yeah, I think I'm kind of going in a different direction here, but I think if they didn't limit buying on Thursday, I think we may have seen this play out on Thursday and Friday.
Yeah, it could have already been resolved. Yeah,
I think. But the fact that people couldn't buy kind of, tanked the price. I don't know how much you were following the price on GameStop, but
I saw they did that. I wasn't following the price. I wasn't following the price closely, but I know it rebounded. And I know that also escalated things, because that was a real damage to trust. Yeah.
I bought 2 more shares because of that, of that day.
Yeah. So they shot themselves in the foot by doing such a heavy-handed action. And
but like as discussed in that podcast with Chamath, like, it was a liquidity issue,
right?
We think, or maybe
there could be
some foul play involved too, but we don't know that, right? But it seems like Robinhood was going to go broke.
Yeah,
if they didn't limit buying.
And people do tend to assume the worst. So whether it's a liquidity issue, and this is it's a question of whether Robinhood can even remain a going concern, or and they're that deep on the chopping block to where their existence is questionable. That's the best case scenario, and then the worst case scenario is that this is a fix, and people tend to jump to the worst case scenario. That's the tendency.
Now,
so
they have a reputation that they got to rebuild. It's kind of a lot of people are switching out because I didn't know that. I learned this yesterday from Wall Street Bets, is that you can transfer your portfolio to another trading platform. You don't have to liquidate everything.
Right.
They can send it to another person. So, and I don't think it takes that much time either. You just make an account on another trading platform, and then they can call it from the other trading platform.
So we've got to figure out a way to represent all these millions of people, and
Yeah.
I hope that this conversation could be part of that starting point for this. And I know there's people that are influential in the movement that maybe you can reach out to them and contact them and just let them know that even though you're not a big player, like you've thought about this a lot, and you've got something to say, and hopefully they're open to having a conversation. So maybe
Yeah.
who knows where this could go, but
I'm going to make a post and we'll see what happens.
yeah,
Get that talk about maybe, 650 isn't like an official price point or anything, but maybe there is a price point where we can agree. So, and not like set the world on fire at the same time.
absolutely. Cheyne, it's always a pleasure talking to you. I think
Yeah.
let's leave it on that note, and
Yes.
hopefully the guys that are seeing this, and whether you own 1,000 shares or you own 1 share, of GameStop, um, reach out and let us know if you think that Chris Voss would be the guy. Let's see if we can get a movement going. I don't know. I don't even know how we arrange that, like how to get a movement going, but first somebody has to speak it. So that's what I did. And let's see if anything happens from
Well,
that.
I'm going to post this on Wall Street Bets. Like I'm going to write up my thing, but I'll post this podcast as well. So his name will be out there.
Cool. All right. Well, let's see what happens, and we'll reconvene in maybe like a week or so, and we'll see where we're at, Cheyne.
All right. Sounds good. Thanks for having me.
Absolutely. Thanks for being on, and we'll see you next time.